So, good afternoon, ladies and gentlemen. It's a modern investing show on Pod TV. My name is Sasha Star, and today's guests are Dr. Milan Somberg. Welcome to the show.
Thank you for inviting me. Delighted
Great
to
to
be
have
here.
you as always. And Jim Eid from Eid Foundation. Welcome to the show, Jim.
Thank you, Sasha. It's great to be here.
Great to have you as always, Jim. So today is unusual Wednesday. The stocks are down instead of being
Yes.
up because of the circus going on in Washington under the name the debt ceiling negotiations. These clowns are unfortunately
Uh,
raining on our parade today.
yes.
There's nothing we can do, but that's okay. It's time to adjust your positions. And if you remember, I think was it a couple of weeks ago or so, and I mentioned it last week as well. Stock under the name Palo Alto Networks, and I had a very significant position in that stock, and it went up ballistic after yesterday's report. It went up at some point to well over 12%. Um, but 12% is something what you can make in 2 years in S&P 500. Is that correct?
That's right. That's right. Reliably. That's
Reliably. Yeah, this is not reliable. It could have been 11%, but it could have been 15%, but it made it like 12%. Yeah, so yeah, reliability is definitely not there. Yeah, you have to guesswork. So by the way, how is S&P doing? I'm not checking very often on S&P.
it has dropped. The S&P has
Drop.
dropped for the day, for the week, for the month, but it's
Mhm.
been up for longer than a month. It's up for the year. Yeah. But for the day
Okay,
down, for the week down, for the month down. Yeah.
okay.
And so could I make a few comments here?
Please do. Please
Well,
do.
Lee Iacocca used to be, when he was a student, was the editor of the Harvard newspaper, the student newspaper, I think it's called the Crimson. And he said that most of the news is in the headlines. And then because ads pay the rent, you first position the ads. And then you write your articles around the ads. So you write around the ads and say everything you need to say about a certain subject in the first sentence or the first two sentences, and also in the last one or two sentences. And everything else is a filler. You don't need to read it. So you can take in a great deal of material, keeping that in mind. The headlines say it, 80% of it, and the first two sentences, last two sentences say the rest of it. So now, if you take a look today, just today, the articles, you do a search for the debt ceiling and the stock market. What's going to happen to the debt ceiling and the stock market? Here's one headline: why we may need a stock market plunge to solve the debt ceiling. We may need a stock market plunge to solve the debt ceiling. Another one says, stocks will be damaged even if the lawmakers reach a debt ceiling deal, from the Market Insider. Another one says, an extended legislative battle over rising the debt ceiling is likely to have a major economic repercussion. This is according to Moody's, and it will include a stock market sell-off. Another one says, debt ceiling has been raised or suspended nearly 100 times since the Second World War. And each time, Congress was locked in a standoff very similar to the one that we have today. And despite eventual agreement, the stock market was affected, and the S&P dropped by 18% in the year 2011. So everything is negative. Everything that you read in today's headline and yesterday's and last week's and so on is negative as far as the stock market is concerned. So let me put a positive spin on that. First of all, we recommend that people have a large cash position all the time. We talk about an asset allocation of about 50-50, 50% in the market and 50% in cash or near cash, such as certificates of deposit or money markets. And when that percentage is thrown off by market movement, you readjust. And every time you readjust, you're either taking profits or buying bargains. You can't lose.
Question. So you have, let's see, a month ago, 3 months ago, doesn't matter when, you started very rigorously to maintain 50-50 allocation. And as the market goes down, as it did in the last months, 3 months or so, so you would move cash into the market.
Right?
Right. So now your position is no longer 50-50. Right now, it's, say, 45% cash and 55% stocks, which, according to your statements, just last minute and a half, stock continue to go down, which makes you to move more money into stocks, less money into cash. Now the stocks went down substantially, say 10%, for example, and you have 40% in cash and 60% in stocks. And that continues. Now your allocation is 30% cash, 70% stocks. But you are recommending to have 50-50. So you,
That's a good percent.
You have to bring more cash, right?
Right.
What are you going to take that cash from your household? You're going to sell your toilet paper supplies, or how are you going to do it?
Yeah, you could do that, but no need to do that, because
No?
if you are in a 50-50 asset allocation, and the percentage is not as important as the amount. You should have a lot of cash most of the time. So it could be 50-50, 45-55, 60-40, 40-60. That's not really that important. The important thing is to have cash lots of the time. Now, if you have 50-50 cash stock market, the market drops, you take your cash and buy enough bargains to bring it back to 50-50. No need to sell your toilet paper or groceries.
Stop. I'm not getting that. Let's say you have 50-50, stock went down.
Right. Okay.
So
you got more cash. You don't have more cash. You have a higher percentage in cash.
Exactly.
So then you bring some of that higher percentage to buy the bargains, because stocks are now more of a bargain than they were yesterday. They had dropped, they became a bargain. You're taking some of that cash that you have to bring that percentage back to 50-50.
So how often you have to check your cash and stocks to maintain this?
Well, the recommendation from John Bogle, who originated this concept, was once or twice a year.
Really?
And it takes no effort.
He's a brave man.
We talk about.
He's a very brave man.
People check it daily, and that's not that important. But checking it once a month is certainly enough to take care of that problem. So, I just read the half a dozen headlines that appeared in today's publications, and they're all negative. And they all talk about the market is dropping. To people who are members of our Monday Morning Millionaire Club, we see that as a positive statement, because bargains abound. So, here's an extreme example that we say only people with a high tolerance should engage in. If the market drops 10%, take a third of your cash and buy the bargains. If it drops another 10%, put all of your cash in there.
Oh, okay.
And then if it drops another 10%, borrow. Now,
yet another 10%.
There isn't something that is necessary to do. It's someone can do if they have nerves of steel, but it gets a very positive result. The history of that approach to investing has been a very strongly positive one. So now, Sasha, let me ask you.
Yes.
That you say that if stock drops 7%, sell it. If the market drops 7%, it's dropping now, you're selling bargain basement prices instead of buying.
There is one caveat to that. If my positions are fully hedged, I cannot and I will not sell at 7% loss because my other, the hedge, the covered call, it's more than enough to cover. And there is another interesting thing, what I've just experienced with Palo Alto Network, and that's what is going to happen to my NVIDIA position. When you sell, for example, what I did with Palo Alto Network, look, it's not Nvidia. It's not such a prominent stock. It's promising situation. It was covered fairly positively, but still, I didn't have conviction on a high degree. Like I was positive, say 80%, not 100 or even 90%. So what I did, I sold very deep calls, covered calls into the money. So if the stock was at that time, say 195 or so, I would sell 190 July 21st calls, collecting monstrous premiums.
Yeah, right,
So
right.
now, if the stock will not move or will go down, I'm fully covered. Now, if it goes high and jumps like it did now, the stock moves much higher and much faster than underlying covered calls. So I'm making almost the same money because the covered call moves very little with this jump in price. So I liquidated, of course, in the morning all my stock position or my covered calls. By the way, I made even more money because uh, what I was trying to do, I didn't really sell the stock. I wanted to buy instead calls, July, same date, July 21st, calls, and replace my stock position with calls. By the time that I was doing so, I bought calls, and then I started to work out the order to sell, unwind my complete position there. In the meantime, I saw that the stock jumped even higher. The stocks that I bought making hundreds of dollars. So I closed position on calls, and only then, when stock went even higher, I liquidated. The actually what's happened that I made much more money than I thought originally I would make on this position. But now I'm out. My positions,
You know
all
what?
my
You
positions
know
are
what it is, Sasha. You know what it is. You are a market wizard, and
no, 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 no.
that does not
No.
apply to most of us. Actually, we recommend against purchasing individual stocks because there are lots of examples of individual stocks that were promising but fell out of bed and got wiped out. Lots of examples of that. So we recommend that we buy the American market as a whole by purchasing an exchange traded fund which tracks the S&P 500. And there are several. SPY is the most common one. And interestingly, even though the market is tanking and all the headlines are negative, there's more foreign money in the United States now than there's ever been before. Japan, for example, has got, I got some figures here, it's got $690 billion of investors' money invested in the United States. Japan has a terrible experience in the stock market. Their market still hasn't recovered after 40 years of having dropped. So in second position is the Netherlands, where they got $629 billion dollars. Canada is in the third position. Canada is in the third position with over $500 million invested in the U.S. market. So even though the markets are dropping, all the headlines are negative, people are putting money in the American market. Now,
Yes, but let's be clear about one thing, because the clowns that Sasha refers to playing around with the debt ceiling are mostly the MAGA element of the House, Republicans, which they don't care what the consequences are to your money or anyone else's as long as they retain power. That's the first thing to keep in mind when they're doing this kind of stuff, because when Trump was president, he said it was unconscionable to play around with the debt. And now, of course, he's advocating that they don't raise it and they suffer all the consequences. Even the very talk about suffering these consequences, which are unimaginable, I don't think that it'll ever materialize. But even the consequences causes people like Japan the Netherlands, and Canada to charge us more to invest in our dollars. And so the price of us incurring this debt is going up for no valid reason, only because we're clowning around. Our government is clowning around, and only because a portion of it has too much power. And because everyone who is reasonable knows that you don't play around with your national debt. And the 14th Amendment was passed so that it was never called into question. And the fact that people are calling it into question means that they don't care what the consequences are. These are irresponsible people and need to be voted out. I'm amazed that you pick on Palo Alto Network because I live in Menlo Park, which is on the border, which is, borders Palo Alto Network, and I've noticed that stock, and I didn't pull the trigger on it. So I'm always impressed with your ability to do that, Sasha. And so I always listen to what you have to say, even if I don't agree with it. But you know, in that vein, you know, we've also been tracking NVIDIA, both of us, and I wanted to mention that Taiwan Semiconductor was another one, because I think the semiconductor industry has become a precious commodity, especially with our relations to China being so maybe on, maybe off. And China's, if we lose the Chinese market for semiconductors, you know, it's going to be a blow. And so we're investing a lot of money in building the infrastructure to support a semiconductor industry in the United States. The Taiwan Semiconductor is doing that, building factories in the United States. Yep. And I talked about it, and then I found out that Warren Buffett invested quite a bit into it. And then I found out, and I reported on this show, that Warren Buffett divested. He sold. Now, you know, Warren Buffett's one of those guys who tells you, you know, buy and hold. And of course, that's not what he does. So, you know, we listen to what people say, but pay attention to what they do.
Yeah, right.
Far more instructive. And but since he sold, I think he made a miscalculation. It's still gone up, and it's doing very well. So these stocks, Taiwan Semiconductor and NVIDIA, are still looking really good to me. And I think, Sasha, you agree.
You just explained why Warren Buffett is not mentioned in this book. He is not market wizard. He's a very lucky guy who got into the investments in the 60s. And at that time, you could buy Coca-Cola and hold it for 200 years, or buy...
In the 1920s, anybody could get a genius.
Absolutely. Or you can buy American Express, or you can buy all those wonderful...
None of the market wizards have had their stellar performance for over 50 years.
They are much younger. That's the only reason why. Because if you will take a record of people who stayed long enough in the market, say 20, 30, 50, 40 years, not 50, I don't think so, but say 20 to 40 years, all of them show results that Warren Buffett is just a schoolboy compared to them, okay? So there's nothing even to compare it to.
The academics generally buy into the efficient market theory. And so these market wizards are opposite, acting in a way that the efficient market theory doesn't explain.
It doesn't explain anything, in fact. Efficient market theory is a myth for weak-minded people to explain that
No, I agree. Actually, I don't believe that they're in an invisible hand. And I think anyone who does, you know, it's not worth having a conversation with them. It just isn't. It isn't true. It's not reality. The reality is it's much more complicated, and
it is not helping you make money. I'll tell you why. Because if you see the Palo Alto Networks is trading, say, 190. So according to this theory, all the pros and cons are already built into the stock. So the stock is perfect at $190 a share. However, today it moved to what is it, 212 or so. So probably that theory is working against you in this case, because according to that theory, you should neither buy the stock or sell it,
Right.
and just watch it. Okay, so
Yes.
you're watching.
Yeah.
So it
Now,
went up to
You
two.
know what Warren Buffett would say, and is likely to say so at the next meeting, which happens the first weekend of May every year, is that, yeah, he sold instead of holding it forever. That's the mistake he made. He did not adhere to his usual norms, which are buy and hold. So he departed from that. Huge mistake. He should have stuck with his original position. The other one is an example would be gold. Warren Buffett has been against ownership of gold for a very long time. Recently, he's been buying gold. And so I'd like to know why. It's probably some people other than Warren Buffett in the business. There's a guy called Abel, A-B-E-L, who is of Canadian background, who is liable to succeed Warren Buffett, who may be making some of these decisions for Berkshire. Well, Warren Buffett was against gold. I mean, he would say, what would somebody from another planet say? You see, people dig a hole in the ground to extract the gold. Then they refine it and make it into bricks and so on. And then they put it back into the ground and hire people to take care of it. So but Berkshire is buying gold. And
or we dig into the hole and we extract the substance and then we burn it for energy.
Yeah.
Yeah. I think that the idea of investing in gold has always been a hedge against catastrophe.
Yeah.
And people always do it, and so there is a point to holding gold because it's the fallback for everyone in every country, and so they.
Oh, that's true. Absolutely true. And that's valuable. That's valuable. Interestingly, the gold has the same purchasing power today that it had 5,000 years ago. A given weight of gold will buy the same amount of wheat, of barley, of beef, or anything as it does today, with huge fluctuations in between, which some people have been able to take advantage of and benefit from buying low and selling high because the fluctuations are there. But the purchasing power of gold remains the same as it has for thousands of years.
It's interesting that you say that, because some of the arguments I've made against cryptocurrency were the same arguments people made against going into paper money. They wanted something they could hold in their hand.
That's right.
And this paper idea, what does that mean? It doesn't, it's silly. And the fact is that we just print it when we need more.
So, that's right. Yeah.
So I'm wondering, actually, with the crypto, at one point it was an idea that it would replace gold as the value, storage of value or something. I don't see any storage. I don't see any value either, because it fluctuates. You cannot store something that one day costs 65,000 a piece, Bitcoin, for example, and then a couple of months later it costs only 19,000 or less. And if you're talking about substantial amounts of money, you're losing probably 60 to 70% of it in a matter of a couple of months, few months or so. That's not storage of value.
Yeah, regardless of the value of it, which I think is questionable. It's the question to me is all the energy that we use to produce it. And they talk about mining, data mining. Well, they're not mining anything. They're just exploiting energy, and they're turning energy into a number that we track and assign an arbitrary value to. And so to me, this whole idea, although I understand the desire to do away with the central banks, to get around them, is every time I do a transfer and it leaves my account and it takes 2 days to pop up into the other person's account, where was that money in between? And why? It was instantaneous. So I understand the thinking behind it. I just don't think that using, rows and rows of computer banks to mine data is a good use of our energy resources, our limited, finite energy resources.
Jim, you may probably thinking that if you would do that transfer in crypto, in Bitcoin, for example, instead of bank to bank, that would happen faster.
That was the idea.
That was the idea. Now, in practice, It is not happening any faster at all, period. Number two, there are substantial fluctuations in those 2 days or 3 days, whatever transaction will take place. There is also spread between bid and ask, so you have to buy every Bitcoin. And if you will go to internet and check places to buy Bitcoin and to sell Bitcoin, you will see what a gross the so-called spreads
Yes.
or fees, or you can call it anything you
It's
want.
the wild, wild west. Yeah.
There's
One
another
company says we have no fee. You can buy, sell Bitcoins. We have no fee.
There's another
But there's a spread. It's even worse.
there's another important element which we haven't mentioned yet about cryptocurrency, and they're very attractive to people who have something to hide. Yeah,
This,
and
this is unfortunately true.
and many of those people are criminals. Otherwise, why would they have to hide something? So that computers, whatever direction we're going in, computers will help us get there faster, and that includes criminal activity. So the criminal activity today is at a much higher level than it ever was before computers, and so cryptocurrencies allow people.
What you're saying is Swiss bank accounts and Cayman Islands accounts. They're so
Oh, that's true.
fascinating.
That's true. Yeah, yeah. You're right.
That's all old school, though. Now we're much more modern in our criminal activities.
They're more effective. Yeah.
More efficient, and that's progress in many ways. And I always think that the people that are trying to beat the system, the criminal element, if you will, are always one step ahead. They're always exploiting things before the law and order comes behind them to clean up the messes, and people get hurt during this process.
Yeah.
There are a lot of new outfits who offer you incredible financial returns from trading crypto. And their explanation is very interesting. So, what they say that there are several exchanges of crypto where they can buy Bitcoin at one price. And they show, I've taken a look, they show, say, 20 different exchanges and a price where you can buy right now crypto. And it could be as low as, say, 26 something $1,000 per one Bitcoin and go to almost $30,000 to buy Bitcoin. So they have all 20 different exchanges. Probably they have many more than 20, but they show 20 probably best known or so on. So that's wonderful because you can buy, say, Bitcoin at 26,200, for example. So it's the lowest. And they show right away who is the lowest, who is the highest, or so on. However, then once you bought Bitcoin, you have to sell it. There is no point for you to hold the Bitcoin, so you want to sell it. So now you open next page. The best places to sell Bitcoin. And all of a sudden, you see the best place to buy Bitcoin offers lower price than you paid for Bitcoin at the best place out of 20. Okay, so now you're in a trap. The only way out of the trap is to wait a day, two, maybe much longer, until Bitcoin will hopefully pop up in price. So at that point, you will be able to unlock your Bitcoin. I don't know what would be your price. Maybe you'll make at the end of the day $200 by risking losing a couple of $1,000 in a matter of half an hour. So this is the prepositions that I would recommend.
Here's a question for both of you, Sasha and Jim. Is Bitcoin is the best known cryptocurrencies? There are a couple of thousand of them. There are a couple of thousand cryptocurrencies. Who is using it? Where are they going? How do they make it? What kind of currency do they have? What are they? A couple of thousand of them.
Well, many of them are designed to go out of existence after they've built money out of not so skillful investors.
That makes sense. Yes.
So some of them you won't hear from again, and
that's right. Yeah. Okay.
It's a set. That's why I think trust is such a big factor in any investment. If you're going to put your investment in it, you want it to be in a real thing, not a fictitious thing. You want it to be able to sell it and to have something managing it so that it is no one's getting ripped off. You You might be making a wrong decision, but you're not getting ripped off.
Yeah, right.
And that's right now, that is the market. The U.S. market, you're not going to get ripped off.
Yeah.
There's regulations. It's highly regulated.
Yeah.
Yeah.
People don't like regulations, but we need them.
Well, absolutely.
So coming back to the market before we close, before several different spreads, I ended up having only 3 positions where I actually have stocks. I'm talking about obviously NVIDIA number 1, Autodesk, which reports tomorrow, is number 2. NVIDIA reports later on today after market closed, and I have also Unity Software, which is
Not
quite
familiar.
a promising idea. And I have a hedge position. I sold June 30, 29 calls, and stock is now about $29. No, it's now lower, 27.98, almost $28. And so I sold these calls. I got premium almost $1.90 for each calls that I sold. So that gives me sort of a very balanced position. I know that I'm pretty well covered on all these positions. And if it pops up, I'll make money. If it doesn't, I'll make money anyway. It's riskier than S&P 500, I must admit.
Yeah.
It is riskier. But I don't have to add up any cash. It's
As I always say, you're both right.
yeah, it carries all by itself. I don't need to add any cash there. Sometimes I'm taking cash out, but I'm not bringing new cash now for a long time.
Yes.
Well, in any
Playing
case,
with house money.
sorry,
Playing with house money.
we are playing with the house money, absolutely. Well, in this case, I would like to thank you very much for
thank you,
today's
Sachin.
program.
Always
And,
good to see you, Millie.
Thank
have
you for
good luck in trading for next week. And we'll see you next Wednesday, same place, same time. Thank you very much. Bye-bye, everybody.
Bye.